Hello folks, I'm LA Little and this is your weekly TA Wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today, or actually this week, and what does it tell us about the coming ones. I do this show once a week, every Sunday night, live at 9 o'clock Eastern Time, here from the base of the foothills of the Rocky Mountains. We had a tough week again last week. Even so, it wasn't as if, there was a huge destruction. We actually finished up on Friday, pushed up about 1/4% on the index, just barely on the composite, flat on the Russell. S&P's almost 0.5% higher. We had gold's down. It looks like it's up a little bit this evening, and I don't see much else moving this evening. I believe Asia is up a little bit when I last checked. We've had selling, we've had not so much destruction, but we've definitely had a tough row of it here on most of the indexes. But that's not really true of the S&P 500. The S&P 500, if you draw the range, right, is still in this little range. You can draw it down as far as down here. It's still in this range up here at the highs, and it hasn't given it up. And this is roughly 6 weeks of it. And so, if you go back and you mark it off and look at the numbers, you started here on the breakout. Let's get the right tool up. You started here on the breakout, right? That was the break. It's 5 weeks now on the break sideways, refusing to come back in. The Dow Jones looks about the same, although Dow Jones is a lot weaker than the S&P 500. But on a weekly, it's hard to make an argument that things are bad. Now, if you zero in, and I've still got the S&Ps up now. If you zero in on the daily chart, right, there's kind of like 3 ranges here. And we've been talking about this for a while. There's one up above, there's the one below, there's this one down here. And it came down on Thursday into this range, tried to reach the bottom end of this range, flipped around, headed back up, and then we got a nasty reversal on Friday in most of the indexes, especially the weaker ones, whereas the S&P still held up 0.5%, the others didn't. And that's kind of been what's been going on for a while. If you just look at these bars, you can tell that the strength, if you want to call it strength, has been to the downside, right? The stronger trades have been to the downside, not the upside on most days. And we can go back as far as here, right, March 11th. And if you just kind of glance at them, there's 1, 2, 3, 4. There's really been 4 strong days since March 11th. And that's a span of about, looks like about 13 trading days. So you can see that it hasn't been as if, this market has been strong. That hasn't been the case. And if you get outside of the S&P, and you move over to something like, the NASDAQ, where it's been much weaker, you can see a pronounced weakness and a very different, behavior. Whereas the S&Ps broke over their highs and was hanging up there, the NASDAQ clearly has broken down below it. And so the NASDAQ now, just like the S&Ps, you can draw 3 ranges in here now. You have the higher range, you have this lower range, and then you have the lowest, right? So there's really 3 ranges going on here. They're all about equidistant. NDX is trying to come back into this bar. That's the Feb 3 bar. That's where they've all, the weaker ones have been trying to come back to. That's true of the NDX. That's true of the NASDAQ. It's also true of the Russell, although the Russell's a little bit stronger than these two. The volume characteristics naturally are higher as you come down. That's almost always the case. Usually the bounce is the question, what kind of volume do you get on a bounce when you come into an area that it should fail? We haven't set that up yet, but we could be setting that up this week, and kind of looks like that will be the case. That Feb 3 bar, I would think, will be the spot that these try to turn around and head back if they get that low. And if we bring it in on the daily, it's this bar back here. You can clearly see, this is the bar. That little line right there, that zone, if you will, is the zone that it's trying to get back into, and you can see it's not that far away. So ugly reversal here on Friday, also on the Russell, also on the NDX. This is where the weakness is coming from. This is where we're seeing, weakness in this market. It's not as if things are going, to hell in a handbasket. As a matter of fact, I think that bar is about as far as it's going to get, so we're not looking at that much more damage to go. The issue will be, how does it come back when it does? ABCD structures here, they will be completed. If they're not already, I think they're just about completed, it looks like. To me, that's probably about as far as you can expect before you get some sort of bounce. It may bounce from right here. It does look like on the NDX, on the Russell, it is going to try to extend a little bit farther. And just assume it, extends to that area. A bounce back up, swing point low, retest regen would be here. That would be where you would think it would fail, coming back into this bar somewhere. And that would set up the next leg if in fact that's the way this thing plays out. Now if we look on the Russell Friday was kind of interesting because it also has the three ranges. They've all kind of set them up now. It got back into the lower of the middle of the three, and is trying to get back into the bottom of the three. And so it too is doing the same sort of thing. When you look at it from this perspective, the real danger on the weeklies is when you get back into these guys, but you're a ways away from those, and I don't think we're going to get there on this move. But the Russell actually did a retest, regenerate, and failed on Friday, and that retest regen was off of this swing point low that it broke. Remember, the Russell broke two swing point lows on the way down. That usually leads to 2 to 3 bars to the downside. So you had 2 bars so far. We'll see if it can get a third one. With the Russell itself, again, just like the others, that would be where it's trying to get to. But that retest regen failure on lighter volume suggests, right, because you compare it to the bar you broke out on, which is this one right here, and you also compare it to the bars you broke, it was confirmed, so you just simply have to look at this bar. That's the bar. Didn't have enough volume as it came back up into that bar, failed, got back up underneath it. That one looks like it wants to try to generate lower. If that is the case, then the question becomes is, do they go deeper than this Feb 3 top, or is that as much as they're going to do? The odds on right now is that's probably as much as they're going to do. And why is that? Well, it's because of all the divergence, right? You've got strength. If you think about the market, you got strength in half the market, you got weakness in the other half. They've been selling big cap technology, and they've been selling all the high flyers. So it's kind of been a huge rush out of those big gains, putting that money somewhere else, either in safety or, as some are saying, overseas. And if you look at the overseas and you go to something like the EEM, which is emerging markets, there you had the breakouts on the top side. You broke multiple swing points. You did a reversal at that high. This high over here is 4101. You got up to 4102. You failed. That should try to come back into these highs either immediately or fairly soon, and retest and try to regenerate. So if we're looking at these on a daily basis, the retest regens are back into these bars. These are the bars to come back into and see how it retests. If it regenerates higher, well, then something really is going on with respect to these, right? You could get an ABCD structure going to the upside. That's what a lot of people are saying. I read probably 3 or 4 articles that made that argument. It's just that argument's hard to make, because if we pull it over and we put it on the weekly, and it may be the case, because there certainly is a scenario where that could play out. You can see here, this has been in a huge range, and you're right in the middle of the range at this point. So it's not as if there's like a major breakout on the EEM, from highs. It's not going to be from the highs. You're coming from a lower level. Now, it just so happens, this is an ABCD structure that just finished. So in terms of, is this going to shoot much farther? I suspect you're going to get some sort of a retrace pretty quickly, and then we'll find out what it really is made of. Is the money going to keep rotating over there or not? And why is the money going into these other places now? It's not just here, it's Europe as well. And if you look at it, you got tapering taking place here. You got easy money policies in Japan. You got China talking up that they're going to do whatever it takes, a la Draghi. And you got Draghi that's about to do whatever it takes. And so easy money, QE type money coming into the system in those three major markets. If in fact that happens, you would think it would goose those markets a la Japan, or AKA Japan, what is it, a year and a half back when they started their nonsense. So let's quickly pop over and look at the world markets and take a look at how these are shaping up. Australia is still pushing up, and Australia is pushing up based on what's happening in China in terms of, partly on their currency, had been on their currency rush higher. But if China increases the stimulus, then Australia can push up higher again since they're supplying them. If we go over to Hong Kong, which is a proxy for the Chinese market, you can see here, and this is on the weekly, you can see here you're right up in the middle of the range from the lows to the highs, so nothing huge there. That to me, tells us anything at this point. If you go over and look at Japan, Japan's been trying to push down into the lows on a weekly basis here, swing point lows here and here. Japan, if it does break down, which would be really interesting given the easy money policies, this would be a fairly significant break if it breaks through here. I'm not sure if it's going to at this point. Looks to me like it's going to bounce around some more in this big range it's trading, and it's towards the bottom end of that range. So I don't see Japan really doing anything from that perspective. If I go over and look at Taipei, the Taiwan market, that one is actually trying to break out higher. If I look at Indonesia, Indonesia also has been trying to push back up. So Asia itself, off of the Chinese news, trying to push higher. I haven't looked at Korea in a while, but I suspect it's doing the same, and it's trying to push higher as well. Go up to Toronto. Toronto's up here at the highs. I mean, when you look at most of these markets, they do not look bad. And if I pop over to Europe itself, which is where we're going to see a decision by the central bank there, you can see it's hanging at the highs. Now, it is kind of, this is Germany. It is a little bit interesting in that, if you're a classical TA person, you're looking at this and you're saying, wow, lower lows, lower highs. Well, what is that? That's what they say is a downtrend, right? And that's kind of what you're seeing here. Is that really what's taking place? I don't always buy that loose definition. I try to look at it from the perspective of, are you breaking swing point lows? And at this point you haven't, and therefore you're still in the uptrend. So until it takes out that swing point low there, you're still in an uptrend. Let's see, the FTSE's probably the weakest of the three. Let's see what she looks like on a weekly. Yeah, it's stuck in a big range. And the CAC's finding value where no others can. It's kind of amazing to me because these guys are running on borrowed time, in my opinion, but it doesn't seem to matter, and they're up there pushing the highs. So I don't see, anything that looks horrible in these indexes. And if I pull this over and look at the monthly, you can see the kind of run off the bottom. This is the CACs. You've gone from two roughly 2,900 up to 4,400 in over about a year and a half. That's a pretty good move, 1,500 straight up. And that's what it's been in most of the world. Now when you see that, right, you think, okay, at some point here they're going to take a break. But you know, folks, this stuff can go on a long time. It's not as if it has to stop. I mean, you know, maybe there's a short-term top in place now in the domestic markets. Maybe it's nothing. You know, maybe it's just a little pullback before we go higher again. Matter of fact, if the economic news starts turning and actually supporting this market, you know, this market can go higher. It's going to have to be economics at this point, because I don't see us doing more QE anytime soon. And so that kind of puts it on the case where the economics are going to have to improve. And if they do, then you could see the multiple expansions that need to take place in the PEs, you know, to support higher prices. If we pop in real quick here to the major sectors, these major sectors do not look bad. As a matter of fact, we just had a big breakout here on the energy sector this week. So you break out over multiple swing points on multiple time frame. Here's the breakout on the weekly, the breakout on the daily. This one's going to try to extend, and that's a huge piece of the S&P 500. But then you look at others within the S&P 500 that are large, and you see them still struggling but holding. Here's the financials. Doesn't look that bad, right? If I go up to the transportation sector, you know, transportation doesn't look that bad. I mean, they're all hanging at the highs, folks. It hasn't really changed. We've seen this story over and over where you make big moves, and we made a big move. You know, you just saw it on the XLI. Here's the XLK. You know, these were big moves off the bottom. I mean, in this case, you went from 34 to 36. That's $2 on 34. That's you know, that's a decent sized move. It's 6% or so. You know, those are not small moves. Now the one that's been the weakest has been the XLY and the XLV. Here's the XLY. You can see that one is coming back in deeper. And the XLV vis-a-vis biotechnology, right, has been getting hit pretty good. But even here, I mean, huge volume off the top here as you're coming down. But even here, I mean, this, how can I say this? I mean, if I just go back, and this is a weekly, if I just go back 1 year, right, prices were trading at 42. Now they're at 60. That's $18 on 42. You know, I can't do the math that quick, but it seems to me that's about 30%. That's a huge move, right? Everything had a 30% move last year. And this is, you know, something that shouldn't be, you know, a huge multiple. You know, I mean, it is not like technology or something. I guess it is technology to some degree. It's healthcare, especially in the medical equipment and stuff, and biotech, right? But, you know, these are big moves. So to get a break, to come back, you know, that's not unhealthy. That's actually healthy if, in fact, they find support, they flip around, and they go and start over again. That's what you have to keep going. So I see so much bearishness all the time, and even though I constantly look at it from the perspective, okay, when is this going to end? Because you know it always will at some point. I can't make that call. I can't say it's going to end. And you know, short term, yeah, it's struggling. Long term, it's a different story. I mean, I mean, here, take it from another. Here's another way to look at it. Pop over to the site, go into resources, current trends, and just look at the current trends. And if I pop in there, let me get to it. Let me see. No, maybe oh, here we go. Let me pop into it this way. Well, maybe I'm not. Let's try one more time. I'm struggling here. Anyway, the current trends on this market, I'll have to come at it differently. The current trends on this market are not, oh, it's because I'm not logged in. That's why. Let me log in. You know, they're not bad. Matter of fact, if you look at the weeklies, if you look at the, here we go. If you look at the weeklies, they're all bullish. The long term, all bullish. All bullish, right? How can you get bearish when you have these kind of trends? I mean, it makes no sense. Yeah, if some struggle over here, that's fine. This always wiggles around. But the long term, you know, it's still bullish. I mean, it hasn't changed. That can change, but it hasn't. To change it though, to take that route and say, okay, how does it change? Well, you got to break a swing point low. If you're going to break a swing point low in the healthcare, for example, you got to come down here and break a 54.65 number. That's 2.3 away. That's 5%. You got to drop 5% to change that trend, right? If you want to change this trend, you got to drop 5% right here. That's a pretty big drop. Will it happen? Well, it's possible. Is it likely? Well, we don't know that yet. It's just not there. It's not in the cards yet, right? How would it get in the cards? Well, if we pop over to the XLV and if we see some sort of a failed bounce that sets up maybe from here even. You know, I mean, you can envision these things, but until they actualize, you don't know what they're going to do. Let's just say this is an ABCD structure. Okay, they could just down into here. You're still nowhere near this lows you got to get to. Okay, so then you get another bounce and then another one. Then you break them. You can see how it takes time for these things to take place, right? The structures just aren't there yet. Okay, let's pop over to the Ox markets. I know that we've got some big news coming out in terms of currency, so let's take a look real quick at the currencies because they could make a difference this coming week. Here's the dollar. The dollar's coming off the lows, had broken swing point lows, doing a retest regen. Okay, so here's the first one. What is that? 21.50. And we're at 21.48. So the dollar so far has been unable on a weekly basis to get back above that retest regen zone. It's struggling to get over it. And so far you would call that a success, and that it's going to try to regenerate lower. Now we can get a sneak peek if that's going to be true. No, we can't do it from here. We'd have to get up to these levels. So far, this is not telling us it's going to go higher. It's actually set up a nice little pattern here to where it looks like it can try to run higher. It's got a swing point high here, and the way it's trading looks like it may try to shoot up there and test it at least. But there's no volume here. Let's go over and look at what else moves it from the other side. So let's pop through the 5 currencies that make up the dollar index. The Australian Aussie. That one just broke a swing point high, doesn't have the volume, but it's a decent push. Yeah, it's fixing to run into more serious resistance. So the Aussie's going to have some trouble here. It looks at about 93.54, which is not that far away. And it also looks like it has an ABCD structure in place, doesn't it? In any 57. Actually, not quite. Even if it was, it's just about done. So yeah, that one looks like it's run into trouble. So that should try to come down, which would put some strength into the dollar. It's not that large of a percentage. Here's the British pound. And this one doesn't look bad. It's coming back up. That one looks okay. It looks like it can hold for a while. Let's see what the Canadian dollar looks like. Okay, so they sold this off heavy and hard, trying to get a bounce. Going to have resistance at 90.69. Yeah, that should be resistance. So that would also make it weaker at that price point. So that's the Canadian dollar, and then of course the big one is the euro. Let's see what the euro looks like. That's about 50% of the weighting. So the euro tests the high, gets over the high, has no volume. Actually had enough volume though to change it. Okay, and on the weekly, yeah, this one actually looks like it's going to get stronger. So that would not help the dollar. And then the last one is the yen. The yen looks like it's trying to roll over. Yeah, The yen's going to try to trade lower. So I don't see where the strength's going to come from in the dollar, even with all the big news around the corner. If that's true, then that should help gold. Let's see what gold looks like. So gold had a pretty good sell-off last week. And 124.70, it traded into it. It's still into it. There's an ABCD structure here to the downside. This looks to trade to about 123, which brings it back into a retest regen. That would be the spot if you're trying to get into gold. See what silver looks like. So on the weekly, silver, $19.19. It's into that bar. Okay, let's see on the daily. Yeah, silver doesn't look very good still. It looks like you can't get support if it comes down another 20-30 cents. Okay, how about bonds? Okay, bonds, they finally get over that high. So that high was 109.34, 109.37. They close. It's suspect, but it's multiple swing points. If bonds shoot up a little bit farther, they're going to have a nice ABCD structure to the top side on the weekly. If that's true, the indexes should struggle, right? That would be the way this should play out. And that would take it all the way back up to here. That's going to be a huge move if in fact it happens. You got the breakout, now you got to see if you hold it. Let's see what the retest regen is going to look like on the daily. And it traded back into it already. That high is 109.34 and closed over it, traded into it. So that's an immediate retest regen. It's trying to regenerate higher. And that's off of both of those swing point highs. It's multiple swing point high breaks. Bonds look like they want to go higher. If they do, that should be difficult on the market. So I got one quick question. Let me pop to that. EWZ. Let's see what it looks like on the daily and the weekly. The question is can it continue? Let me get the right symbol in, EWZ. And so EWZ had a big move. It's coming up into resistance. Had some nice, well, these volume spikes don't look bad here, do they? On Brazil. Let me see what the daily looks like. So, talk about a straight up move, huh? I think you'll get a pullback just like we were looking at on the EEM. Same sort of thing, back into here. Can it continue? Yeah, I think you get a pullback, right? You can get a nice ABCD structure to the top side. Let me look at the weekly one more time. Yeah, I think it's going to struggle right here. 48.50, 46.71 to 46.71 to 45.76. Yeah, it can. It almost got to the 45.76, so maybe a little bit more and then some sort of a pullback. All right, folks. You know, don't get too bearish on the markets. They're always going to pull back some. That's what they're doing. Can they go higher? Sure they can. Can this be a top? Yeah, it can. You never know that until after it takes place. You can see the danger when the danger comes, and you know that it pays to get a little careful, right? But you can't just assume this thing's gonna, you know, he's already put in his top and it's done. Maybe it is, but then again, maybe it isn't. And if you're asking me, I think it probably holds this range for a while longer, lets those NDX, NASDAQ finish off what they're going to do, and then you see the bounce. And then we'll find out if it's really going to make some new highs or not. If we get another one of those V-shapes, right? The forbidden V-shapes, the ones that come and just keep coming forever and ever. Have a great night, folks. Thanks a lot. Take care of yourself, and I'll see you next time. Until then, I'm LA. This was your weekly TA Wrap. Have a great night and take care.